So hello everyone and welcome back to US Selena Talks. In today's video, we're going to break down the technical and fundamental outlook of the biggest US stocks dominating the market right now. So we'll analyze Apple, Nvidia, Amazon, Microsoft, and last but not least, Tesla. So these companies represent trillions of dollars in market capitalization and heavily influence S&P 500 and Nasdaq 100 composites. Okay, so we'll go through technical structure, key support and resistance levels, institutional sentiment, and what traders should watch next. So let's start with one of the most important companies in the world. So first of all, go to Apple. Okay. Here let's talk about Apple. Currently traded at $250 with a market cap above $4 trillion. Sorry. So, from a technical perspective, Apple recently pulled back after a strong rally earlier this year. Key levels traders should watch for resistance zones are 261 and also 266. If Apple breaks above $260, the next volume move could push the stock toward the 280 region or even the 270.89. So for support zones, we have the first support zone here at 242 and also at 224. If the stock falls below 242, we could see a correction toward 225 to $222, where strong demand historically appeared. So fundamentally, Apple continues benefiting from services revenue growth, ecosystem lock-in, and expanded AI capabilities within its hardware. However, valuation is still relatively expensive compared to historical averages, meaning Apple may trade sideways before the next major move. So now let's talk about the most important stock in the AI revolution, which is Nvidia. So, NVIDIA has been the biggest winner of the AI boom, supplying GPUs used for AI training and data centers. From a technical standpoint, NVIDIA remains in a long-term uptrend. Key levels here are for resistance are 187, 185, and then we have 203. So, if NVIDIA breaks 185 or 187, momentum traders could push the stock toward 195 up to 203. So, um, for support zones, we first of all have the first one here at 172 and the second one at 163. So the biggest risk for Nvidia right now is valuation compression. When a stock rallies extremely fast, institutional investors often begin profit taking, which can cause temporary corrections, but long-term fundamentals remain extremely strong because the AI infrastructure demand continues growing globally. Now, we look at Microsoft. So, it's another giant benefiting from the AI boom, okay? But Microsoft's biggest advantage comes from its strategic partnership with OpenAI, integrating AI tools directly into products like Azure Cloud Services, Microsoft Office, and Copilot AI systems. Technically, Microsoft is trading in a structured bullish shadow. Key levels for resistance are 442 and 489. So, for the support zones, we first of all have 384 and then we have 350. So, if Microsoft holds above 385, well, the long-term bullish trend remains intact. But from a fundamental perspective, Microsoft is currently one of the most stable large-cap tech investments, combining cloud computing with AI and enterprise software. This diversification makes Microsoft less volatile than some other tech stocks. So we next move on to Amazon. So Amazon is one of the most diversified companies in the market. Amazon's growth is driven mainly by A. Amazon Web Services, cloud computing, e-com, and also digital advertising. AWS alone represents a huge portion of Amazon's profitability. From a technical perspective, the resistance levels for Amazon, we sitting at 207, are 2, 219, 234, and then 247. But for support zones, you first of all have 195, around 179, and then 161. So breaking above 220 would likely trigger a strong momentum rally. So, and if the stock loses 196, the next major demand zone sits near 178. So long-term investors remain bullish on Amazon due to its dominance in cloud computing and logistics infrastructure. So now let's talk about one of the most volatile stocks in the market, which is the beloved Tesla. So talking about Tesla, its valuation has always been controversial because investors price it not just as a car company, but as a technological and AI company. Key growth drivers include autonomous driving, AI robotics, and energy storage systems. Technically, Tesla trades with much higher volatility than other big stocks. Okay? So the key levels for Tesla in the resistance zones are 452, 433, and also 418. So if Tesla breaks above 418, you could see a strong momentum toward 480 even. So for the support zones, we first of all have 384 and 357. So a break below 384 could trigger a deeper correction, but Tesla remains one of the most speculative but high potential stocks in the market. So overall, the biggest US stocks remain in long-term bullish trends, but markets are entering a phase where volatility is increasing. Several macro factors will influence these stocks. First of all, the interest rates and Fed Reserve policy. Secondly, inflation data, AI investment cycles, and then the global economic growth. So if interest rates stay elevated longer than expected, then high valuation tech stocks could experience temporary corrections. But long-term innovation in AI, cloud computing, and automation continues to support these companies. To summarize, the biggest stocks dominating the market right now are Apple, Microsoft, Nvidia, Amazon, and Tesla. Each of these companies is shaping the future of technology, and their performance will continue influencing the entire US stock market. In the coming weeks, traders should watch key resistance breakouts, support holds, and macroeconomic data. So, if you enjoyed this analysis, make sure to like the video and subscribe for more weekly breakdowns and stock analysis. And let me know in the comments which stocks you want me to analyze next. So thank you for watching and I'll see you in the next video.